A risk manager needs hard skills as well as soft skills to discharge his or her role effectively. The risk manager's role in a bank or financial institution is quite different from other business managers' role. Therefore, the nature and degree of skills, as required for a risk manager, are somehow different from those of business managers. A successful business manager should be able to work under stress, and should possess negotiation skills, leadership skills, and communication skills, which equally holds good in case of a successful risk manager as well. However, risk managers need more skills specific to the risk management, which include exposure to financial terms, exposure to business statistics, interviewing skills, analytical skills, communicating as risk manager, and constructive criticism. Exposure to financial terms. Risk managers should have sound knowledge of financial terms, in order to understand and manage market risk, liquidity risk, and credit risk effectively. Such financial terms include assets, liabilities, working capital, leverage, liquidity, equity, ratios, cash flows, funds flows, key performance indicators, key risk indicators, etc. Exposure to business statistics. Business statistics involves collecting, classifying, summarizing, organizing, analyzing, and interpreting data in the business domain. A risk manager needs to understand histogram, scatterplot, normal distribution, mean, median, mode, standard deviation, variance, covariance, confidence level, correlation, probability theory, linear regression, etc. Mastering statistical terms enables a risk manager to make sound and quick decisions. Interviewing skills. A risk manager needs to conduct risk assessment of various business processes. To conduct such assessment, a manager needs to interview business managers to gather required information. The interviewing skills include drafting questionnaire and conducting interview. The questionnaire should be free from bias for effective results. Analytical skills. Analysis of risk is one of the important roles of a risk manager. Once risk manager interviews business managers in the process of risk assessment, he or she must analyze the findings and make proper judgment about the risk. Also, analytical skills are required while using statistical tools. For example, when scatterplot is created, the risk manager should analyze it and take decision about outliers. Similarly, after computing correlation between various independent variables in modeling probability of default, the risk manager should analyze the degree of correlation and select appropriate independent variables. Communicating as risk manager. Business managers generally comment good news, related to the performance of the institution, to their bosses. On the other hand, risk managers always need to comment about the risk, which itself is bad news, related to the institution. Risk managers require special skill to communicate such news. Also, risk managers should always speak within the organization, as risk manager. They should use appropriate risk terms for effective communication. For example, if an incident causing risk to the bank occurs in a branch, instead of communicating it as an event occurred in a branch or a problem exists in a branch or an issue exists in a branch, the risk manager should communicate it as risk event occurred in a branch. Constructive criticism. One of the important roles of risk manager is to identify risks in the business process and raise the issue with concerned business managers. Criticism is generally not liked by business managers. In some instances, business managers may take the issue personally. Risk managers should handle such issue tactfully, and should continue to raise time and again until the issue is resolved.